Hey guys, welcome back. In today's video, we are talking about the AMC plan, the $10 billion trade error, buying back shares, and many more in this video. Now, we have obviously the earnings coming up very soon. And so I wanted to revisit something we've covered in the past, and it's essentially understanding the plan of AMC. And so this is obviously the AMC Go plan, and this was something that was made by Biotech Moves, and it covers what AMC's talked about in terms of what they wanted to do. And so firstly, what we can see is that for Q4 2024, complete C upgrades, and then we also going into 2027 to 2031, we obviously just have a lot more things coming. And so this is why I said with understanding to be expecting the improvements of AMC, to be expecting the sentiment of AMC to go up, and obviously understanding the potential of AMC. Now, we've seen how one of the things they've done is obviously talk about cost savings. So they're going to be trying to cut down operational costs. And so that's obviously a good thing, increase movie attendance. And what that means is obviously increased revenue. Now, in our previous video, we covered about the Cinemark earnings. What you will understand from the Cinemark earnings was actually their yearly movie attendance actually decreased. Now, what I think will be different for AMC is that actually we're likely to see an increase on that. Like I said, I'm very excited and I want to see what's going on for AMC because it would say a lot for us. But if everything that we see in the Go plan obviously reflects and even goes even better in the Q4 earnings that we're about to see, then we can understand truly how big of a potential AMC is and what we should be expecting the whole of 2025. And so like we talked about, increased movie attendance will mean increased revenue. And what we can see here with the cost savings will mean a cut in the operational cost. Now, of course, there are multiple other factors, but when we take a look at what the two things I've already talked about, what that means ultimately is obviously increasing profit. And we talked about how when AMC goes into a positive cash flow, when they have a healthy cash position, they will be in a position to offer dividends. And that ultimately will be something that we want. And it will be something that's good for both the investors and for also attacking the shorts. And so that's why the earnings are very important to keep a close eye to. Now, because of the earnings coming up, because of what we are seeing and what we should be expecting, we're seeing a lot of news flying around for AMC. You can see AMC stock surges on Bitcoin news, meme stocks making a comeback. Now, there is no relationship between Bitcoin and AMC. Now, the only correlation you could ask for here is about understanding how Bitcoin at one point, and potentially even now, but with a different method, was used as a collateral to suppress AMC. And so in this position, Bitcoin news would not have an effect on AMC. What they're trying to do is obviously pinpoint AMC on different factors, on different areas, so that they're able to use it later on down the line. Remember, we talked about AMC's majority shareholders are retail investors, and we are not bothered whether the S&P is going up or down. We're not bothered if the Bitcoin, if crypto is going up or down. We're obviously worried about AMC, and we're focused on AMC. And so there's a reason why we're always seeing these news. And I want to quickly reflect it with what retail stock is saying here. So you can see, not surprised to see the amount Citadel Securities is paying for order flow, almost $1 billion. And something that he says here, and I agree with it, and it's always what I've said as well, is I'll say now what I've said then. For-profit businesses do not pay for something unless they can generate profit from it. Now, I want to slightly reword it in terms of the sense that a for-profit business will not pay for something unless they can benefit from it. Now, whether that benefit means generating profit, or at least in most cases it is, but obviously in some cases it could be different, it's pretty much the same meaning. Because how we've seen in terms of, because the fact they paid $1 billion for order flow, we know that they're making a lot more. We've also seen how in the past, obviously when they get fined for mismarking trades, when they get fined for naked shorting, it's only a cost of business because they're getting fined potentially $10 million, $100 million, but they've made $1 billion in return. So when you look at it from that perspective, obviously it's a worthwhile thing for them. And now the same thing can be used for all these news we are seeing for AMC. When we see these news for AMC, we know that it's because the short sellers are paying for it. Now, why are the shorts pay? We talked about in terms of they need to profit from it. They need to benefit from it. So why are they paying for it? Well, if they're only paying for it one time, and if we only see one particular piece of news on AMC, it means that they just want to make a quick buck, and they just care about AMC going down in a short term. But if we're constantly seeing them making news on AMC, then the benefit here is that they obviously need to continuously have AMC's price going down. And so what I'm trying to say here is understanding the fact that the more they're making these news articles, the more news articles that we see, the fact that they're still continuously making news articles, it just shows that they're trapped in this play and they need to suppress the price. And obviously that's something that is showing how desperate they are. Now another thing, and you can see here, breaking, the new CAT consolidated audit trail error, data shows a massive $8 billion trade errors on Jan 13th and another $2 billion the following day. This has to be the most ever recorded, right? There needs to be severe punishment for this ASAP. So we've seen how the CAT system is being put on a break. Now, it's not a surprise that it is, because it's able to catch on to errors like this, where over $10 billion worth of trades are obviously showing errors. And so clearly something is going on here. Clearly something needs to be talked about and took actions upon. Now, we've seen how obviously Doge is auditing the SEC, and they're looking for mistakes like this as well. So obviously, hopefully, they look into this, they solve this, but we can see how and why the shorts want the CAT system to be stopped, because of how it's obviously exposing them. You can see another thing. According to recent data from the FTC, consumers reported losing over $3.8 billion to investment scams in 2024 alone, reaching a significant portion of the total scam losses reported this year, which reached nearly $8.8 billion. So you're telling me they collected $8.2 billion and only returned $345 million to investors. Anyone see a problem here? And so this is just pinpointing in terms of how, corrupt the system is. It's just talking about how regulation isn't really here to actually help out the retail investors. And so when we see the CAT system put on a break, it isn't because it's damaging the retail investors, it's because it's damaging the institutions. And another reason why it's doing this is because when you take a look in terms of how overexposed they are, these 6 banks hold $452.86 trillion in OTC derivatives. That's over 3 times the global money supply. Total assets, 25.2 trillion. Risk-based capital, 930 billion. So you can see JP Morgan, Goldman Sachs, Citi, Bank of America, Wells Fargo, Morgan Stanley. And when you take a look at this, some of the leverage that are being used here is just, insane. We're looking at, from a small proportion, 1.77, fairly normal. But then it goes up to 8x, 29x, and for Goldman Sachs, 101x. So remember, this isn't 101x on, $100, on $1,000, on $1 million. This is 100x on billions, if not trillions of dollars. And so this is how over leveraged they are. And this is why they're continuously worried about the positions they've put themselves into and why we're seeing them hedging and trying to protect themselves. And so you can understand when you look at in terms of how big this situation is. Now, furthermore, we can see here, selling put is more bullish than buying call. Someone is worried. Where we're seeing nearly $500,000 in GME puts just sold off. Now, this is obviously very bullish. And the reason for this is because, firstly, what we're seeing is these puts were so deep in the market maker had to sell 100 shares for every put contract. Now that they're sold, the market maker must drop the hedge and buy all those shares back. And so this is what we're seeing. And, could be why we're seeing all of these buy orders coming through. While a second near, 1 million buy order on GME today hit lit market, and another thing of 1.4 million buy order for 55,000 shares. Now, this did get routed via the dark pool, but what we're seeing is a ton of buy orders coming through recently. What we are seeing for GME is tons of indication for bullish movement. Now, like I said the whole time, It isn't a competition between AMC and GME. When we see GME going up, we're also going to be seeing the pressure being relieved from AMC, and therefore we'll be seeing AMC going up as well, and vice versa. We've known the value at risk for both AMC and GME. We've known how they are mutual short sellers. And so when we see this, we should be glad that it's happening. And you guys, thanks for watching. I'll catch you guys next time.